Okay, hello everyone. Welcome. My name is Nina Olson. I'm the Executive Director of the Center for Taxpayer Rights, and this is the first tax chat in a series that is funded by Arnold Ventures on transforming the tax administration toward an effective, trusted, and inclusive IRS. And the rationale, the impetus behind this series was reading a lot of newspaper articles and quotes from people about what the IRS was going to do with the $80 billion, including hiring 87,000 revenue agents carrying guns and other weapons, which of course completely ignored the fact that they don't have the authority to carry guns, so never mind. But we thought that there needed to be really a discussion about, what $80 billion can do for the IRS, what some of the risks are, the challenges, and what could be possible successes, and some recommendations on how to go about, managing what is really a once in a generational change, amount of money. And so we're going to have about 15 workshops, everything soup to nuts, but I guess the soup right now is former Commissioner Charles Rossotti, who has graciously agreed to join us for a chat. The question and answer you can ask, we don't have a question and answer, you can put comments and questions in the chat and I will be monitoring them. We have time to have a good discussion, but I'm just going to start welcoming Charles and give maybe a little background for myself with how I know Charles is that Charles was the commissioner who actually worked on getting me hired and appointed by Secretary Summers as the taxpayer advocate. And I was able to work under him and report directly to him as it's required by statute over the remaining years of his tenure as commissioner. And I learned an enormous amount from him. I can't tell you how much I learned from him. It's hard to really express that. And I just, the other thing that I would recommend everybody is if you have not read it, you should be reading his book, Many Unhappy Returns, that came out after, I think that's in reverse, after his tenure ended. And it really talks about his experience becoming commissioner and working on the challenges of the day. And so with that, I really want to start the conversation with Charles to talk about what the state of affairs was with the IRS back when you became commissioner. This was the restructuring commission was going on, but just going through your book, I noted that you had written that in 1995, there were 400 million busy signals, which was more than there were people in the United States in that year. That in 1997, GAO had did a report, an audit that had shown that IRS employees were basically doing unauthorized browsing of taxpayer accounts. Again, in 1995, the IRS financial accounting system was a disaster, did not get a clean audit. In 1989, IRS had started a major IT modernization system. By 1996, it had spent $4 billion and had pretty much nothing to show for it. It was terminated in 1996. And it just goes on. By 1997, Roper had recorded the IRS having the lowest rating given to a private or public institution in terms of public confidence in the previous 15 years. It had a 34% positive rating, which was 10% below the next lowest rating, and that was private and public. So that's pretty abysmal. And it almost sounds familiar with the way people have been talking about the IRS today. Yeah. So you walk into that mess. So I guess the first question is, why on earth did you walk into this mess? And how did you go about dealing with this?
Well, I didn't ever expect to be IRS commissioner. I had spent most of my life in the business world, and I had no real tax experience other than paying them. I did pay them, but other than that, I had no tax experience. What happened is that the Secretary of the Treasury at the time was Robert Rubin, decided that with all those problems that you cited and others that he was doing, that he needed to find a person with management experience, and particularly he was focused on technology, and that was the business I was in. So I mean, I say this in jest, but it was really true. He called everybody in his Rolodex in New York that he knew, and they all turned him down. But he finally found a pigeon. That was me. After a while, I didn't ever expect to be there, but he just had someone that knew me call up and say, would I come in and talk to the Secretary of the Treasury? I didn't even know what it was about. And, that went on for months, and he persuaded me to do it. And part of it was that, before I agreed, there was this commission that you mentioned that was going on. It was called the Kerry Report, which had been commissioned to study what was to be done with the IRS. And I read some of that and a lot of other things just outside, and decided that, well, this was really something that seemed like it was a big problem, but a soluble problem potentially if you could get the support. And the commission did a good job, actually. Not all of them do, but this one did. Had some practical things in there, many of which I picked up on. And so finally I agreed to do it, and that was why I did it.
Yeah. Well, so you were confirmed in a incredibly bipartisan way. I don't think there was any vote against you. Is that correct? Yeah, which is, of course, really remarkable.
The last question at my confirmation hearing was from Senator Graham of Texas at that time. And he said something about, he said, well, Mr. Chairman, he says, I think at this point, anybody that wants this job, we ought to just let them have it. And, so I said, okay, that's my start.
So, you get into the IRS and there are so many things happening there. And how do you decide what to start? You have the IT issues, you've got taxpayer morale. There had been hearings that had shown, abuses by IRS employees. Certainly what you saw were the use of statistics, if not driving individual employees, then driving managers who in turn would drive individual employees. Where do you start with these projects? How do you decide where to start?
Well, this is why I think that, the IRS commissioner job at all times, but especially in a period like that, and it's true today, really is a management and leadership job. I mean, there is some policy element, but as you know, Nina, the Treasury really controls the policy issues and not the IRS. You have to weigh in. And the very things you're talking about are sort of classic in any kind of a large organization that needs to be, I would say, turned around or improved significantly. And it starts with breaking the problem down. It looks overwhelming. I mean, it's so huge. It's all these different things. So, if you get overwhelmed and try to do everything, which actually at the time I took over was pretty much what the IRS was trying to do, because they had hundreds of initiatives, each one attempting to do something positive, but not many of them actually succeeding. So the basic thing is, you at a top level, you try to decide what the main goals are that you're trying to get to. And then, you break it down very, very practically into priorities, which is an art. You got to get people together. In the case of the time that I was there, the top level goals really aren't any different today there's really two main things that the public should expect and does expect from the IRS. One is that the average person, most of the people, millions of people in this country that are doing their best to pay their taxes, you got to make that as easy as you possibly can. It's such common sense. Nobody deals with more people and more businesses than the IRS, and they're paying money in their taxes. Why make it hard for them? You have to try to make it as easy as possible. It's not easy anyway. That is the general goal. Then you have to break it down how you do. The other goal is some people are not paying everything they owe for a lot of reasons, but some people aren't. So that's also in the interest of the broad taxpayer base. You want to try to get some of that money that's due, because it's only fair to the broad taxpayer. Those two goals are never changing. It's today. It's the same thing. Now, how do you translate those into action? Well, that's the hard part. Although I will say defining those top level goals is important too, because at least at the time I was there, as you mentioned, there wasn't a lot of emphasis earlier on making it easier for the taxpayer. It was all about the money, and some people actually in the IRS said, well, our customers are the Treasury Department. They're the ones that we should serve. We want to just give them as much money as possible to the Treasury Department. So, wait a minute, who's paying the money? We're not, it's the taxpayer that's paying the money. So, I mean, even getting those top level goals straight sometimes can be a little challenging. But once you get those, the really hard part is the action. And then the question comes, how do you set priorities? And in any business, any organization that's large, you can't do everything at once. You have to break things down into pieces, into smaller pieces. And then there's some things that you can do soon and some things you can do later. So the first thing, one of the first things that I did, and I believe this is something that needs to be done now, is to take those broad goals and those many things that you could be doing and figure out what you're going to do that you can really deliver on soon. And as you said, we just wrote 3 commissioners, myself and 2 others, just wrote an article about 5 things you could do right away that would help the taxpayer. That's the kind of thing I'm talking about. It may seem obvious, but it's actually quite hard because there's many pressures. There's pressures from all directions. There's pressures from the outside, obviously, from the many different groups that the IRS deals with, including tax practitioners, probably some on this call, a lot of people on the congressional side. There's, internal pressures. The administration has their priorities. I mean, right now, for example, you've got the Inflation Reduction Act, not just the part that gives money to the IRS, but there's a whole lot of credits and other things like that need to be administered that, for better or for worse, they give it to the IRS to do. So there's a whole lot of pressures. And I think the leadership and management is to sift through those and put them in a way that is practical. Very hard to do, because if you try to do everything, you do nothing. And, if you do the wrong things, they don't have an impact. And so, there's a lot of work that has to be done in doing that. And I'd say today, right now, the new commissioner, I'm certain that he's wrestling with that exact issue, because there's so many things on the agenda. Then the other thing about it is, who is going to do these things? They don't get done by robots, notwithstanding that we have, artificial intelligence and all these wonderful things. They do not provide the leadership and the management. People have to do things. So setting a team together, of people that are bought into the broad goals, but are also practical, in terms of their ability to do it. And I'm sure that Commissioner Werfel is thinking that point through too right now. So I don't want to be any more right now because you have other questions, but that was where I faced it. And I don't think it's that different today. There is one very big difference, though. One very, very big difference, and it's a positive one, in that there is the prospect of some assured funding for the IRS. That was never the case in my 5 years. It was not only that there wasn't enough funding, and most of the time it was going down, but occasionally we would get a dollop of funding, and it'd be for 1 year. You cannot make positive change to any really manageable extent in any organization the size of the IRS if you are doing things in 6 months, then you don't know what's going to happen 6 months later. And that regrettably was the situation my whole 5 years. That is a big difference today. And if it's handled properly, that can make, it doesn't mean you're immediately going to be successful at everything, but it gives you a chance to set these priorities in a sequence that makes sense. So that's a huge advantage today that never existed, for me or any commissioner in the last 30 or 40 years.
Yeah. I just know, just heading the Taxpayer Advocate Service, you'd get your appropriation halfway through the fiscal year, and there you are hurrying up to hire people, but you can't hire the people because you don't know what your appropriation is going to be the next year, and can you even pay them next year? And it just becomes a very vicious cycle and very demoralizing, and employees are sitting in their offices looking and seeing, vacant desks and things like that. And, what's management doing? Which kind of goes to one of my questions, which is when, you talk in your book a lot about, building trust, that was key to the relationships in your business as you did, AMS, but also in your family's business. It was all built on relationships. And as you noted, there are lots of different pressures on the IRS, but even internally, there are pressures. And when you walked in there, distrust with employees of management, like they felt like they didn't know, managers didn't know what what employees were doing, and managers were getting directives from the national office that were often, contradictory or were reactive. That was something certainly I saw was, if Congress pushed on something or even a GAO or audit report came out, all of a sudden it becomes the micro focus of, leadership, and there's stuff that gets pushed out. And it's often like, well, wait, that doesn't work at all with what we're seeing on the ground or what we're doing. And it's not really clear how we should guide our employees. So how do you deal with that and deal with the distrust that I'm sure you just, and I witnessed it too, that you walk into?
Yeah, the distrust was very, very serious at the time. It may have been more serious then than now, because there was a lot of accusations against individual employees. That's fortunately today, that's not, thankfully, that's not the case. I mean, there's a lot of distrust of the IRS, and, there's anytime there's a incident, which is terrible, that reflects on the agency, but there isn't a lot of individual criticism that, employees are abusing taxpayers deliberately, that sort of thing, thankfully. So we don't have that, but there is this problem of the flavor of the month.
Yeah.
That's what the employees call it. The flavor of the month today is whatever we're, been told to do because we're reacting to something. That's where the whole internal setting of priorities is tied to the communication and building of trust. Because the way that you build trust is to communicate what your goals are and what you're going to do in a clear way, but then to actually follow through and try to do them in a practical way, not just change your mind the next day. Not to say that everything always goes right, but if you never, follow through on things, people will become very cynical for good reason, internally and externally.
Mhm.
So, I mean, you don't change the trust equation overnight, but if you set the same thing I said at the beginning of this call, set the clear goals. This is what we're trying to do, service, compliance. But we're going to have to figure out practical ways to move to those goals, not get there instantly. And then you communicate those projects. In the case of my time, at the early stages, I did a lot of communication, as I think the new commissioner will do, both internally and externally. But we also backed it up with this prioritization where we said, okay, for the immediate future, these are the things that you're going to expect, that we're going to do, to try to move towards the goals. And then, on the Hill, and of course, I spent a great deal of time, as all commissioners do. I testified 48 times in 48 hearings in my period. I can't remember each and every one of them, but they were each very significant. And before those hearings and after and all the time, you're communicating with people on the Hill, one-on-one, staff and members. And, they each have their own point of view, but they will listen. And if you are very, straightforward and honest, you will say, I can't do everything at once. This is what we're trying to do now, and this is what we're going to do later.
Mhm.
And these are the directions that we're trying to go. And if something doesn't go right, well, okay, you have to acknowledge it and move on. Nothing ever goes perfectly all the time. I mean, that's not all rocket science. It's just a lot of work to do it every day.
Mhm. I just have this memory. I mean, I think I was on the job for 2 weeks, and Todd Grams had come on as chief financial officer at the same time. And you took the two, as you arranged for the two of us to go down with you to the Austin Service Center. And you had a town hall with the employees there. And I'd never witnessed a town hall, that you would, and I'm standing behind you, and you're seeing all these employees just standing there like this because they're angry and they've got things to say and they're distrustful. And that was years into your tenure. But you just stood there, and as they lobbed questions at you, you just very forthrightly and transparently and candidly answered them. And it just diffused the room. And it wasn't like you were promising the moon to them.
Yeah.
You were just specifically taking each one credibly and respectfully, but even disagreeing, but telling them what your point of view was. And I don't think a lot of them had ever experienced that. And it seemed
Again, it's management 101. I mean, you have to build trust by communicating with people, and you learn of it. I probably traveled in my 5 years almost every week to do something like that, and many times I would meet not only with a town hall but with a small group of employees at a time and managers, and take notes, and I learned a huge amount. from that. So I just saw today in the paper that there's a new chief executive officer at Starbucks, you know, the coffee chain. And he has promised that he's been trained as a barista, as a coffee maker. He's going to spend 4 hours a month actually doing coffee in a different site every day. I said that's good. That's what, and he's going to have these, you know, a lot of the other executives do that too. You learn a tremendous amount. I mean, I also did something else that had apparently never been done. At least that's what I was told, which is I said, I'm going to go out with agents on audits occasionally. And they said, you can't do that. You're the commissioner. I said, I can do that. I'm the commissioner. And I did. I went out with revenue agents to visit, you know, people doing audits. And I would just introduce my, people thought this will never work. It did work. You know, I would introduce myself. I'm just here to sit in and listen, sit on the side and listen. And same thing on phone calls. You can sit in and double jack on phone calls and listen. All that stuff is really important to not only build trust, but to learn, you know, it's in any large organization, you know, things get filtered as they go up the line.
Yeah, that's just, it's, yes. There was controversy about calling taxpayers customers. So where do you want to weigh in on that? You know?
I don't like the word customers because I think that the relationship between the IRS and the taxpayer is not a voluntary one, as you would be if you were a customer. That you know, now you may not, some customers of businesses aren't that voluntary either, because you may only have one choice, but it's still different. So I just like taxpayers, and to me, taxpayers are exactly the correct word. But you know, if somebody wants to call them customers, I don't think that's a big deal. I mean, the whole point of it is that you want to treat them like they're customers, and you know, like you're dealing with somebody that you value as a customer. But you know, the wording doesn't matter to me. It's too much.
And so early on, you took a whole bunch of people on a bus to MBNA, which had excellent customer service, and then took them to the former Philadelphia Service Center, which was quite a place.
Yeah. Well, I thought that, you know, I knew from my prior business that particular company was very good at customer service and also in using technology for, I mean, this was, don't forget, 1997, what you didn't have, what you have today, but still in the technology that was available today, they were at the forefront in making it useful. And it was the way that really the technology that they gave to their employees so that they could accurately, you know, help the customer solve their problem. And, you know, I realized in my time when I was going to Capitol Hill, you know, prior to my confirmation, talking to people, that the idea of technology, everybody, well, don't forget 1997, but even then people understood you need computers, you know, it's kind of vague though. What is this all about? So I really wanted to try to get home, you know, what the difference was. And that's why I did that. And I think it was a pretty successful thing. We took a busload of staff people and show them, here's how you can do it if you really got everything that you need. You got and then we went to, and the thing about the Philadelphia Service Center, of course, back then they didn't even have much, they didn't even have electronic filing, so everything was paper, and you could just walk around and just see mounds of paper, and people trying to cope with this, you know, in a way that was very, very difficult. So it just was a way of illustrating, look, here's where we are, and here's where we need to get to, and that's a big difference.
Yeah, I also think, you know, what really came out of the description was the actual physical environment that the employees were sitting in at MBNA, as opposed to the environment at the campuses. And now the Philadelphia campus has moved to a different location, and I've been there, and it's much nicer. Still, it is not what you would want if you want quality service from folks. It's kind of brutal. Yeah, that's a real challenge. And that kind of goes to the performance measures. I remember coming in and I didn't have any experience with this level of management. I don't know why anybody appointed me to the job given that, but anyway, you know, I learned quickly, and, you know, I would look at some of these attributes, the concept of balanced measures was really like words to me until I started delving into what it was about, and it made sense. But why don't you talk about, this concept of balanced measures and what you were trying to get at with that?
Yeah. Well, I think that there's one of the perennial issues at the IRS and any organization actually is, what do you measure? Because there's a sort of a slogan in management that says what you measure is what you get, and there's a certain truth to that. And in any successful business of any size, there are measurements of a lot of things that tell people, whether things are going right or wrong, and whether we're being productive or not, and whether we're succeeding or not. But it's in any business, and it's even more so in the IRS. It's very, very tricky to get those sets right, because, and you even see it in businesses where, you've seen, like in certain banks where, they've gone off the tracks, where they put requirements on people to open new accounts. And so they started opening accounts that were phony accounts just so they could make their numbers goals. I've seen that 50 years in business. I've seen a lot of those things. That was what was happening at the time at the IRS. And it was really not badly intentioned. There was a lot of thought that, well, these are all bad executives that are doing things because they hate taxpayers. They want to be nasty. No, there was a requirement had been established even by Congress. I think it was the Government Performance and Results Act, or whatever the name of that it was, that said we should have more measurements in government, just like there is in business. Yes, we should. That's true. But how do you do it correctly? And unfortunately, what had happened, and this happens everywhere, by the way, not just, what people started with, well, let's measure what's easy to measure, right? I mean, let's get the statistics that we get. Well, what could you measure? In the case of the IRS back then, the easiest thing to measure was, the kind of enforcement statistics that are readily available. I mean, like how many in the collection area, it was, how many liens or levies did you put on to get people to pay, or how many audits did you do, or how much more, even more important, how much revenue did you collect from enforcement, whether it be collections or audits. And then, that as a top level is to some degree meaningful. But then when you got it all the way down to an individual revenue officer and said, you got to put so many liens out every month, you can see exactly how that's going to go awry. Yeah. Because there were no compensating measures for the things that are harder to measure, which is, are you treating the taxpayers the way they're supposed to be treated? Are you conforming to, taxpayer rights? Are you providing answers to taxpayers when they have a question? Is it an accurate answer? Harder to measure than how many liens did you put out? How many, how many audits did you finish? So the idea of balance is well established, that, you need to have, if you're going to have measures, you have to make sure that you get the right measures that cover the whole spectrum of things, not just one dimension. Easy to say, again, not so easy to do. And that it will be true equally today. I mean, you can't run any organization without having measures, but they're very powerful, which is why people use them. They need to be done with great care.
One measure that used to drive me crazy was cycle time. But I mean, cycle time is really important because you don't want the taxpayer, dragging on forever. But what we saw in the cases that came to us was, if the unit was measuring cycle time or putting emphasis on it, it meant that the employees were, prematurely closing the case because they were under pressure to get to the next case, which led the case to us, and then we had to get them to open it. And so in the Taxpayer Advocate Service, we made cycle time a diagnostic that we would monitor, but it was not a quality measure. But then once we did that, we had to spend an enormous amount of time educating our managers. Like, that's something to tell you that you might need to pay attention to what's going on in the inventory of that case advocate, but that doesn't mean it's not a measure. Yeah. And that was really hard because it was so easy it was a number that they could do. And I mean,
in any measurement system, a measure, or metrics, as they call them in business, the risk is always the same. It's, you measure what's easiest to measure, and then people will just find any old way to meet that. And it goes true in business. I mean, you've seen it in so many places go awry. You don't want to go the other extreme though and not measure, because if you don't measure, you have no idea what's going on.
Right. Right. Yeah.
So
And
these are why it's not so easy.
yeah. I think also if you're starting from the point of view of those two primary goals that you've got, which is basically service to one and service to all, and then the
Yeah.
service to all is the compliance
Right.
aspect of people not paying. And I think you framed that in your modernization report in 1997, that to me, it was just like, you would be able to get to good measures if you approached it from those very high, statements. And it would also lead you to thinking about measuring certain things that you wouldn't normally. One thing that we always said was, you're reporting in your statistics of income how many math error notices you're issuing, but you're not reporting how many math error notices you're abating. And so there you may be creating, if you don't monitor that measure, you don't measure that, the abatements, the number of notices that you sent out that somebody called back in and got you to reverse, that's creating work for you. You don't look forward to say, is there something I could have done up front that would have prevented me sending that notice and fielding that phone call and having to make that adjustment and wasting those resources.
Another thing to way to look at it, and I think that this is why it's important to have people that are educated on this, is that I don't care how good your balance measures are. Ultimately, it requires exercising judgment on the part of management to determine, okay, what conclusion do I draw from these measures? You know what I mean? And it's a conclusion at any level. It might be a conclusion about a system like math errors, whether the system is working right. It could be a conclusion about the way a given unit is managing itself, and whether they're being productive or not. And it could even get down, eventually you have to evaluate an employee. But I've never seen a situation where you can evaluate an employee strictly on a number or a set of numbers, or if you do, you have a lousy HR system.
Right.
So it always requires judgment at every level. One of the things that that I tried to do and instituted with Todd Graham's the person you mentioned who became the chief financial officer, and this is true in every business I've ever been in. They have these things. Is we would have periodic, like maybe every quarter or every 2 months, we would have a full review where we would bring together for a given unit, a given, let's say, business area, the management of that group, the staff people from chief financial office, and put all those statistics together and say, look, let's sit down together as a group and decide what are we succeeding at and what are we not succeeding at. And you use those numbers. Okay, you use those numbers. And you might use something like cycle time that you said is not good as a single measure, but you might still look at it and say, look, why are we taking so long to do these audits? Is it a good reason or not? And is there anything we can do, on math error notices to get more accurate ones, so we don't send out math error notices that are going to be, then have to be followed up and abated. So if you have that kind of a process where you have all the people in the room and you have all the data, you can make intelligent decisions about what's the actions that you want to take to make things better. That's every business I've been in for 50 years. That's the way people, they have different ways of doing it, but it's basically amounts to the same thing.
Yeah, well, I just have to say, as someone who, had to participate in that process, in the beginning, it was like, whoa, this is so onerous. This is a huge amount of stuff, because getting the material to you meant that everybody had to roll it up to me and my deputy. And we dedicated a whole day to sitting down with the people who had submitted information to us to go through every single page of that report and say, wait a minute. First, it was an opportunity for me to see the measures at that point of view, rather than, down in the weeds or one thing at a time. And you could see interrelated things. But it also was a way to go back to my staff and say, wait a minute, why are you going in this direction? You didn't tell me this. And so it surfaced stuff that we were able to deal with. And it also showed, like one measure in the cases might be you have more openings of cases than you do closures. Well, what's happening to that ratio? We're not rating anyone on that ratio, but that means I've got to make a case for more employees, because we're getting behind, we're getting underwater. And there's the proof for that. Now whether that gets it through the budget cycle or not is another matter, but at least I had the data to make the case and make it to you. Yeah, it was really powerful. I learned a lot about it. So I want to go to silos in the organization, because, you know, one of the things that you did when you came in was this reorganization plan of organizing the IRS around,
Yeah.
you know, the types of taxpayers that you had. So you had wage and investment, and you had small business, self-employed, and it was large and medium-sized businesses at that time, which became large business international, and then tax exempt government entities. And, you know, you abolished the districts, which I think was really rattling for many practitioners. I always said that, you know, districts were great if you had a great district director, and they were terrible if you had, you know, a really bad district director, because they were kings and queens and they ruled with an iron hand, you know. But the IRS has really gotten away, I think, over time from that focus of, you know, first of all, focusing just on the type of taxpayer. You know, small business, self-employed, they're really doing all compliance work in the IRS except for EITC. And, you know, they've got automated collection, they've got, you know, exam, they are doing LBI exams. You know, a lot of the offshore exams are in SBSE. They're doing EITC sole proprietorship exams. And then you've got W&I really dealing with the all customer facing stuff like the phones and the processing of returns. And I've been struggling myself with thinking about how would you reorganize to get back to that focus on the type of taxpayer, and having maybe units, you know, an operating that really had all those cross-boundary responsibilities. But then you get into nobody talks to one another.
Well, see, the thing about it, first of all, let me just say, I'm not completely up to date on all the intricacies of how they've got everything organized, but I would have been shocked if they were still doing everything the same way after that we started 20 years ago. I mean, and so it's perfectly appropriate that, you know, those kind of adjustments would be made, and I expected them to be made. And the thing that I would also say is that there's no perfect organization in any large organization. You know, really large organization like the IRS, you know, there has to be some breakdown of responsibilities, you know, that makes sense. In the 50s, it might have made sense geographically because there were no real communications and you didn't have computers. In today's world, almost nobody does it that way because you just don't, you know, want to have a different tax administration system on the, you know, West Coast or the Northern California to Southern California. And the computer systems have to be standardized and all the data has to be standardized. So you would never go back to pure geographical type thing. But the fact that they refined some of the business units is perfectly sensible. There's no perfect organization, and in any given organization where you have broken things down into some pieces, which you have to do in order to set management, there's always the need to have cross communication. So again, that gets back to management. I mean, if you organize this way and you've got these 4 units, you know, you constantly should be looking at, you know, can we move some things to be more efficient so that one can cross service the other? Every big organization does that. And then at the top level, there has to be an integrating function, which is what the corporate office does or the commissioner's office does to, you know, to ensure that there's not, mistakes made because there's a lack of communication between the organizations. So that's kind of organization 101. And, you know, I can't say, well, if they only did it a little bit more this way or that way, it would be better. No, it's more a matter of fine tuning and how you run the place on a day-to-day basis to make sure there's coordination.
So one experiment that happened when I first came in, it seemed like it was ongoing, was you had all created units that had revenue agents and revenue officers under a management. And I guess the theory was, and it sounded really good to me, that many times people are fighting about a liability when in fact they really can't afford to pay. And also you want the touch on the taxpayer to be, you're all done. When you're done, you don't have to worry about anything more. But what I heard from folks was, you know, that if you had a revenue agent that was serving under a revenue officer manager, they hated it. And if you had a revenue officer that was serving under a revenue agent manager, they hated it. Yeah. Just seemed like you just had 2 different cultures. So do you have an answer to that? Because I thought that was a great idea.
You know, honestly, I mean, that's at a detail. I don't know enough about what's happened since then to comment on that. But, you know, not all experiments work. I will say that.
Yeah, we also faced that in TAS because we were, our employees saw cases that, we
Yeah.
took all the issues there, and cross-training employees was really, really difficult.
Yeah.
But you also had to build on the strengths of the employees you had, but give them at least a general background knowledge so that they knew when they needed to reach out for help on an issue that they didn't know. But it was really challenging. Well, maybe what we should turn to is really where we are today.
Yeah.
Like what with the 80, the $80 billion, you and the other commissioners, Commissioner Goldberg, former Commissioner Goldberg and former Commissioner Koskinen, wrote in tax notes just last week, a couple of recommendations, that were starts, and you noted that there's a lot of attention on getting out of the backlog and, picking up the phone calls, which the, Treasury has dedicated some of that money up front to do. But you also noted that that was kind of backward looking. You were digging yourselves out of a hole rather than forward looking. And you made some proposals about forward looking. So do you want to talk a little bit about that?
Yeah, I mean, again, this goes back to the thing that I said that it's a big problem. You've got broad goals, service and compliance, but how do you get started, and how do you make progress? You have to break it down. So this is just an article that the three of us wrote to try to lay out, a few practical ideas on how you could set some of those priorities. And we had, 5 things that are already to some degree or other underway at the IRS that use technology that's available today that could, we think, potentially make life better for the taxpayers over the next year to 2 years, let's say next 18 months. Obviously, we're outsiders, we're not in, so not all of this may be 100% on target, but I mean, you can read the article, but as an example, allowing taxpayers to file documents, through a secure messaging system. They already can do that to some extent, but really rolling that out so that you don't go back to this long delays and mistakes when you send things back and forth through the mail. Just finishing the process of filing getting rid of pure paper filing, not getting rid of them because some people always be paper, but converting all of that to an electronic message. And you recommended yourself, I know, Nina, long
decades ago,
so many different ways. We got up to 80 or 90% on electronic filing, and during the pandemic, it just showed how much of a cost there is to not finishing that job, right? To having still paper. There will always be some people that want to file a paper return, but there's plenty of technology available through a variety of technologies to take that paper and immediately translate that into an electronic form so that it's available to the IRS in an electronic form. And that's in any strategy that I know of should be a top priority. You just don't want to have large, the picture of those people sitting there like they did 25 years ago, at tingle tables and processing returns. Those can be, even if they are filed on paper, there's ways through scanning and other things to put them into an electronic form. That's just obvious one. Things like just posting documents. If the IRS has got initial projects available, started where it allows taxpayers through would be a secure form of email to be able to send documents back and forth to, let's say, somebody that they're working with at the IRS. It's more detailed in our article, but if you can get some of these practical projects done in the next 12 to 18 months, they will make it more efficient for the IRS. They will relieve some of the stresses on taxpayers, and they will go beyond just getting rid of the backlog, and that has to be done. But they will go beyond that and make it a more, I would say, easier process for a lot of taxpayers.
Well,
and be more efficient for the IRS.
Yeah, and this kind of goes to, where the money is in the budget, because some of these technology things, even though they may be on the service side or the enforcement side, are they all under IT, ops support, or can you use the funds that are dedicated to
Yeah.
service, or the bulk of the funds are on enforcement? So like the
Well,
improvements that you're talking about uploading documents.
well, I mean, that's a good example, because
Yeah,
I've told people that, that this breakdown by appropriation is not really very helpful in terms of understanding a lot about what has to happen, because that's a good example. One of the proposals we have is correspondence audit.
right.
And they're starting to experiment with that, but allow correspondence audits to be done through essentially an electronic visit, with an agent. It's just like the old-fashioned office visit where you go in and bring the paper. It'd be an electronic version of that. You can do that. You can have a secure conversation. You can exchange the document. You do everything. That would be so massively beneficial in terms of reducing time of the taxpayer, reducing mistakes. If you can solve something in 5 minutes by a conversation and you have all the documents available, you don't have to replace the whole master file to do that. That's just something that you can do by exchanging documents. That's a good example. Well, I don't even know what appropriation that has to go into. I mean, it's really enforcement. It's improving the enforcement of the ability to do correspondence audits, but it's using technology to do that. So I think the right way to think about this is not by what the appropriations are. Obviously, there's a legal requirement to conform to appropriation. I understand that, but to think about it in terms of the results that you're trying to get. What is the end result you're trying to get? If you can improve the process of doing correspondence audits by having, effectively, secure video conferences and exchange of documents, that helps everything. That helps service, that helps compliance, that helps the taxpayer, and it saves money at the same time. So, I think that, the broad categories like enforcement and service are necessary, because that's the way the appropriations are done. But the way to think about it is what the end result is.
Yeah.
And many of these things have more than one, aspect to them, as the example with the correspondence audit shows.
That was just music to my ears when I saw that, because we'd been recommending, the virtual office visits for years, and the document upload, and just the downstream benefits of that you're not having repeat calls, you're not getting appeals because nobody's listened to you, you're not ending up in tax court because nobody saw your documents or read your documents. And it also goes back to measures, is that there's no one person accountable for how that case is handled. And that's 70 to 80% of individual exams are being done by correspondence these days.
Well, and then there's another one that's in the works, and I don't know all the, where on collections, that, when there's a behind, if the taxpayer wants to do an installment agreement and they agree that you can almost automate that entire process, basically the taxpayer is voluntarily paying and they just want to pay over time, and there's within the guidelines that can be done almost, instantly, if the taxpayer wants to do it. And I understand that there's even some, initial work already done on that. But those are examples. I mean, there may be refinements of these things. I mean, we're from the outside, we may not have all the details exactly right, but they're intended to explain how there can be, relatively quick over the next year to 18 months. You can do some things that'll make a big impact.
Yeah. So let's shift a minute, since we were talking about service and enforcement. So you've written about the pendulum swinging between those, and there's a lot of attention, the bulk of the 80 billion was on enforcement.
Yeah.
And you've written a lot, and you've got your website, shrinkthetexgap.com, talking about what, and you had the proposal about bank information for over 400,000. So as you're thinking about this, like, how do you start with the tax gap? Where do you start in the tax gap?
Well, I think that, first of all, I mean, there's been a lot of discussion about the fact that there's going to be, I just want to clarify one thing, that there's going to be a revenue agent on every corner. I have made a calculation, and this is not an official calculation, but I think it's a reasonable estimate that even if the money is spent on enforcement as much as it theoretically is in the appropriation, which as the example we just gave on correspondence audits, it's not that simple, but let's say it was, you would still have only about, after 10 years in 2030 or 2031 or whatever it is, the final period, and you got the whole $80 billion, and you have, you would only have about the same number or slightly more than revenue agents than existed at the IRS when I was commissioner. Okay, and think of how much bigger the economy is now. So, I mean, there's no way that enforcement, if you want to think about it, that is going to be achieved, or the tax gap is going to be reduced by flooding the zone with revenue agents. That is not going to happen. It's not possible, even if you wanted to do it. So what do? You have to think through the whole compliance strategy in a different way, just like every other organization, and figure out, in a systematic, strategic way, where are the biggest shortfalls, if you want to call it that, the biggest places where underreporting and lack of payment is happening. And it is in the upper brackets that there's been a talk about why did the Treasury say over 400,000. You can argue about whether it should be 400,000, but the fact is that most of the underreporting is at least in the top 10% of taxpayers for sure. But it's not all of even in the 10%. It's only in certain categories. And the thing that is going to have to be done if we want to be effective on that is to be very targeted, is to be very precise and very clear on where the issues are, and not, again, just like on the priorities on the service side, tackle them one by one. I've given examples in some of the things I've written of places where, we have data and they're not using it. The entire partnership, there's a lot of discussion about partnerships. And yes, there's a huge amount of money that is now flowing through partnerships or S corps, but flow through entities. And there's been historically essentially no enforcement activity, on that, very, very little. So what do? Do you go out and start, auditing a lot of partnerships? No, that's, you may have to do some because you need to get the data in. But I mean, just to start, you've got an entire inventory of K1s that we're not using. Okay, so the first thing might be, as an example, do some work on just checking K1s that are already there and how they're being reported on the tax returns, which is a complicated process. With technology today, it's possible to do that. That's just one example. At the other end, we're talking about large corporate tax returns. The IRS does have data and does use data, of course, on public corporations. There's a lot of publicly reported data that public corporations report. They do use it to some extent, but to my knowledge, or the best I know, there's a lot more that could be done by using the data that's already reported to be more accurate in pinpointing what are the types of issues that are really worth checking up on and avoid the problem we have now, which is a tremendous range of no change audits on large corporate audits.
Okay.
And again, by the way, the solution is on measurements, not to just say to everybody, oh, you have too many no change audits, therefore, you're not doing a good job. Well, then somebody's going to find a way to find $1,000 on a $1 billion company and say that wasn't a no change audit. That's not the point. The point is to try to use that data to figure out how you can be more accurate in pinpointing where there might be, material underreporting, and then use that data to help the auditors that do go in to find that efficiently, so that you're not wasting time. So my basic point on the tax gap side is that the starting point has got to be a better strategy. There's got to be a real strategy office or strategy. Somebody's going to have to figure out a compliance strategy that breaks the problem down. Everything has to be done by breaking things down, breaking it down into where we can believe that there is a significant amount of money that is missing. And then what are some efficient tools that we can use to go there? And you break it down into pieces and go one at a time. Across the board, big increases in auditing in the way it's done now is not going to produce the desired result at all.
It's really funny when you were talking about you need a strategy, because at one point when we were visiting the Swedish tax administration, we met with the person whose title was chief strategist for the tax agency.
Oh, that's very interesting.
Oh, what a great job. Like if I weren't the national taxpayer advocate, I'd want that job.
Well, if you could send me something about that, I'd like that, because I think that this is true of again, it's the same thing that you have in a business. I mean, you have a big job. You want to, let's say, increase your market share of your product, which is a little bit analogous to increasing the compliance rate on, you don't just say, okay, we're going to go out and send advertise and direct mail to every household in America. No, you got to figure out where are the people that really, where are the places that you can have an impact. In the case of the tax gap, it's a big number, but it's not everybody. Even in the upper brackets, it's not everybody by far. And there's different techniques that you can use for different parts of that. And starting with using the data that the IRS already has that it doesn't use, that's number one. Yeah.
Well, and that goes to the other thing is that, although everybody's focusing on don't use the resources on the use the resources on the over 400,000. It's like, what are you doing for the experience of the below 400,000? And that's where your core exam proposal comes in. But also, do you have to audit that many people? Are there other ways that show that you're paying attention to what they're doing and nudging their behavior in a direction?
Well, it's interesting you say that, because I happen to find that the GAO, this is in one of the articles that I wrote, the GAO actually issued a report years ago on things that the IRS could do on something that we know that there's a significant amount of non-compliance among upper income self-employed people. Okay, but not all self-employed. Obviously, it's a large. There's millions and millions, and they had a whole report 20 years ago on about 20 different things that the IRS could do besides auditing to try to find and improve compliance in that subgroup. None were implemented. Okay, now part of that might have, and all you got to do is they reissued the report recently. All you got to do is that's just one example. Okay, upper income self-employed people, not the guy who's a part-time Uber driver with $40,000, but people at the upper brackets, which is where most of the underreporting is. And yes, some auditing would be there, but they have a whole report with about 20 different ways that you can approach this. Some of which are things like soft letters. So there's a whole array of things that they came up with. That's the kind of thing. That's maybe one example. Another example is high-income non-filers. TIGDA did a report on that said identified a significant amount of potentially missing income from high income people who are not filing returns at all. There's data available in the IRS to find those non-filers, if you use the data correctly. Now, it's not a matter of just sending out auditors to everybody. You first have to do the analysis and figure out, with the data you have, where are the people that are significantly underreporting and non-filing. But if you take one step at a time and take each of these pieces, that's what a strategy is. You're going to get there. But if you try to do it across the board, which I know the commissioner is not going to try to do, but I'm saying if somebody thought that was the way that you would do it, you would be making a big mistake.
Right. Well, sis, to that point, I think, talking about how do you go about choosing where on IT you start. You've made recommendations about, looking at documents and things like that. But obviously, everybody's talked about the 1960s technology and, the master files. So, and that you were trying to replace the master files and even before you got there. So what do we, where do you start? How do you start thinking about that? And
that's a great question, because that is really a very important, very, very important and often misunderstood, in my view, thing about the IRS technology. People always talk about, and it's true, that the basic tax processing systems, the master file being a key part of it, that are very old. Some of it has been replaced, but much of it is very, very old, and it's central. So that is a project that is going to have to be done over a long period of time. There's no quick way to replace that basic tax processing system, because it's used every year in the filing season, and it has to be updated every year for the tax code. And as GAO just recently in a report said, having that old technology is a very high risk and very expensive. So it's something over time that really does have to be replaced, but it cannot be done quickly. It's impossible to do it quickly. That's a 10-year program. At the same time, you can't wait 10 years, and you don't need to wait 10 years before you deliver the kind of things we were just talking about. You don't need the new master file in order to have a video conference with a taxpayer on correspondence audits, as an example. And so what is needed and this is where the funding, assured funding, is so important. This is really, really important, is you need two paths at parallel paths at the same time. One path has to be done, as Gio said, over time, gradually. These old master file and tax processing systems do have to be upgraded to modern technology, because keeping them, without doing that, the risk becomes too high that you can't maintain them, and the cost of maintaining them becomes too high. And so that is an investment that has to be made. It's like replacing the foundation on your house. You don't replace the whole foundation once the house falls down. So you got to do that, but you can't wait for that to provide, improvements in service and compliance, and you don't need to, as is true, obviously, from many of the examples that the IRS has already done, as well as other things that could be done. So the thing that the assured funding is going to allow to be done, which could never be done well before, is to have two clear paths at the same time. One path is you're replacing the foundation in the basement, the master files. You're going into that every year. You're replacing some of the bricks. Eventually, in some years, year from now, you'll have the whole thing done. It's going to take a long time, but each time you do that, that's reducing your risk and making things more efficient. But at the same time, you then have a whole series of priorities as how you're going to improve service and compliance using technology. And it's a hard management job, but it can be done. And by the way, you know what? Every business I've ever done, large business, has almost the same issue. If you think about it, most banks, they haven't replaced their deposit system. I mean, they're not as old as the IRS, but many of them are pretty old, actually, and they have to replace them over time. But they don't wait to do that in order to give you online banking.
Right.
I mean, everybody has online banking. They didn't have to wait to replace their deposit system to do online banking. So, I mean, it's only more pronounced in the IRS. It's not a unique problem. It's old. It's older than most of them. But I can tell you, because I've been in the business for a long time, there's a lot of businesses that have some pretty old systems out there. It doesn't mean that they don't go forward and do the things they need to do to improve their service in the meantime.
So one question about that, and I don't have an answer. I'm really asking this as like, how would you do that? Is that too big of a project for one person? The IRS has a CIO. Do businesses have the CIO that does like the improvement projects and then another?
Oh, no, and I mean, that's an organizational issue. You have to have some unified overview of it, but then it's like anything else. You break it down into pieces. I mean, we actually wrote an article, one of my former colleagues who was a chief technology officer and also worked at the IRS a year ago, I could pull it out. We wrote an article about how you go about doing that. It's on our website. And you can read that, but it's not a unique problem to the IRS. You have to have people in charge of each, but then you have to have some coordinating functions that coordinate, very carefully how the things work together. And I will say this, if the IRS had a way to magically replace its old tax processing systems in 6 months and bring it all up to date, that would be great. That would make everything easier, but you can't do that. That's just not going to happen. It's totally impossible to do that. I don't care who's in charge. So, that being the case, you have to manage at the same time to do the things you need to do to improve on your basic service and compliance goals.
Right. So maybe we'll just wrap up, because you've been really generous with your time, is how do you manage expectations, both of the employees, of Treasury and the White House, of the Hill, of the public? How do you do that?
Well, I think that requires a lot of communication and being really honest about what you can do and what you can't. And it all gets back to, priorities, explaining your plan, not over-promising, trying to, if you have a fallback where it doesn't work, acknowledge that and move on. I mean, it's just a lot of day-to-day communication and a lot of work. There's no magic formula for it, but you can be done.
Yeah. So just so people, you can put questions in the chat. We have a little bit of time left. And I just want to note that, the individual that Charles referred to, I think that's Fred Foreman, right?
Right.
He's going to be on our third tax chat. We're doing our tax chats in a series. The next tax chat, which will be on April 13th at noon, is going to be about the IRS budget. And we're going to have Ursula Gillis, who is the former IRS Chief Financial Officer, and Mark Mazur, who was Director of Research at the IRS and then Assistant Secretary for Tax Policy, who's going to talk a little bit about return on investment and how you determine how initiatives might produce revenue or improve service or whatever. And then we're going to have Jessica Lucas Judy from GAO talk about some of the audits and the projects that they've got underway, looking at how the 80 billion is being spent, kind of the oversight on this. And then the third conversation that we've got scheduled, which is on April 18th at 1:30 Eastern time, is going to be on information technology challenges. And there we've got Fred Foreman, who Charles mentioned, and David Hinchman from GAO, who does their technology audits, including the one that you just mentioned, and also Marina Nitze, who has worked with a lot of entities that have tried to do these transformative projects, about how you really go about them. And I think one of the strong messages she's going to say is echoing what you said, Charles, is that you don't say we're going to do everything all at once. I think, one thing that I don't see any questions, maybe I'm missing them. But what one thing that we always did and struck me in the annual reports to Congress, and you mentioned in your book, was that, when you came in, there were like 5,000 improvement projects underway, and there was just this whole list, and you got a team together to winnow down to 157. But, when we would work on the annual report and do the most serious problems, and my teams would go out and look at, well, what's been written in the IRS about it, we would find reports and recommendations all over the place, which is why our books always had footnotes that were half the page long, because we wanted people to know that it wasn't like the IRS was ignoring these problems. It was just, and there were real recommendations. They just never seemed to get adopted.
Well, that's the whole point.
Which is a challenge. Yeah.
That's why the execution side, and the prioritization is so critical.
Yeah.
It really is. I mean, the pressures are always to do more, and that's understandable. But the challenge of leadership is to figure out what you can and can't do, and what time frames can be done.
Well, so Larry Campagna asked, is there anything that practitioners, great question, that practitioners should be doing to try to prevent congressional reductions of the IRS annual budget or the promised 80 billion for reform?
Well, I think practitioners, I think it's a two-way street. I think the IRS, when we talked about service, we talk about it to taxpayers, but a lot of the things that really would, be most beneficial, I think, would be, so many taxpayers use practitioners, and especially those with the more complex returns. So a lot of things we're talking about, like even on these correspondence audits or, other types of audits, exchanges, would benefit, the practitioners who are served, so on the IRS side, I think the IRS, I hope, will be having and I'm sure they will be having when we're talking about these priorities, having very, very active dialogue with the practitioner groups about what they think is the priorities should be, so that they get them right. Assuming that the IRS does that, I think that would give some ammunition to the practitioner groups who have good contacts on Congress to go back and say, look, this stuff is real. I mean, we're going to get some stuff out of that. That's going to help taxpayers and help us as practitioners who serve the taxpayers. So I think if that dialogue focuses on practical improvements that are going to take place, especially on the service side, but also on the compliance. I mean, as I said, the line between what's compliance and what's service is not really as hard and fast as it seems, because if there's going to be an audit and you can make that audit process more efficient, I guess that's service in a sense. It's making the compliance process more efficient to the taxpayer. So I think that the answer is that I think that hopefully the IRS will be engaging in dialogue with all the practitioners groups on these priorities, and assuming they're followed through on and are done correctly, that should give, I think, the ammunition to the practitioners groups to talk to the people on the Hill about why this is important, and be more informed about how to do it, very concrete.
Right. You know, what you just said about the audits, I mean, I've been saying this for years, but you know, the point of an audit is to educate the taxpayer. What did they do wrong so that they go forward not doing it again and they get into voluntary compliance? And the dollar amount is a byproduct of that. It's not, again, that goes back to measures. And we tried, you know, I said for years that you should be having, did you educate the taxpayer as one of your quality measures? And then in your surveys, your taxpayer surveys, you're asking that question. Did you understand what you did on the audit that needed to be changed? And if there's a mismatch between that, then you use that information to go back to your employees and say, spend some time talking to the taxpayer about what they did wrong. So they leave that audit knowing how to go forward. And that goes to your correspondence exam proposal, you know, that you have a virtual one. So you have that conversation instead of sending it in a letter that nobody understands.
Well, and then on top of that, going back to the compliance strategy office, if you do that, then what you can do is you can have people analyze a sample of all these correspondence audits and analyze and figure out what can we do at a broader process level to avoid having these compliance problems in the first place. I mean, it could go anything towards forms design. It could go to website. It could go to guidance that maybe, you know, has to be issued by IRS guidance. It could be a lot of things.
So Megan Prutti had a question. The current commissioner, well, and maybe you, both of you have worked under presidents from both parties. Since then, the politics have only gotten more complicated, with one side taking a solidly anti-IRS position. Do you see any hope of getting a bipartisan consensus on IRS budget reform, compliance service, since it's so central to our government and economy functions? I think part of what we were trying to do in the beginning was show that it was so deeply political and divided when you know, in the years leading up to your appointment. It was not very different from today in many ways.
It was, well, it's always different. As I said to you the other day, you know, there was a famous historian that said history doesn't repeat itself, but it does rhyme. And, you know, I think that's a better way to look at it. Yes, there was very divisive. I mean, remember, I testified 2 weeks after they had a hearing on the Senate Finance Committee that was televised for 3 days with IRS employees testifying behind black hoods to hide their identity because they were claiming they were going to be punished if they testified and all this. And taxpayers, you know, complaining about how they were being harassed. You know, it wasn't so easy back then. You know, and yet, you know, we did have a lot of support on both sides. I think that is a role for the commissioner to try to make sure and I know he's doing this. I know that this is his view, that he's there to be an honest broker to make the whole process work better, not to take sides in any partisan way whatsoever.
Well, and I also say about, you know, about the new commissioner. I mean, I served under him for 6 months, and he came in acting in an awful period of time when there was the Tea Party debacle, and talk about highly politicized. So he knows, he's got experience navigating that. And I would say this is not worse than that time.
No.
Having been there, that was an awful time.
Yeah, I think we had another question I saw.
Yeah. What is your assessment of how the IRS is doing so far with deploying the IRA funds?
I think it's too early. I have no, it's way too early to say. I mean, they're in the early stages of planning that.
Yeah, and we don't have the report yet.
No, we don't have any.
I hear that that's coming out, you know,
Yeah,
maybe soon, and that will be helpful.
It's much too early to say.
Okay, well, unless we have any more questions, I just want to thank Charles for taking this time and really sharing your thoughts and your experience, because I think it helps. I guess I would close by saying, I think talking about these concrete proposals with members of Congress and making the case for how this really helps their constituents. You know, when I said that, you know, 75 to 80% or even 85% of individual audits today are done through correspondence, if you can improve correspondence audits, that's incredible. And that helps their constituents. It helps small businesses. It helps everybody. And, you know, getting through the paper backlog is, you know, credible too. So I just think there are ways to give concrete examples saying this money matters, but it matters because you need that security to plan going forward and not have it changed from one year to the next, because otherwise you won't get these fixes. So I want to thank everyone. This has been a great chat. Everybody who's signed up for this will get an email being able to sign up for the next chat on April 13th on the IRS budget, and we'll go through the mystery of what's in what category and what isn't. But Charles, thank you so much for coming and talking to us today.
Sure.
It was terrific.
Thank you. That was great.
Okay.
It's a lot of
Bye,
fun.
everybody.
Talk to you later. Bye.
Bye-bye.